thanks for taking the hot seat today, and congratulations again on the recent IPO. We have a lot to cover in the next 20-25 minutes. So why don't we dive right in, and we'll start with a high-level overview of Zefiro Methane for our audience, if you don't mind.
Not at all. Thanks for giving me the opportunity. Can you hear me okay?
Yes, we can. Thanks.
Great. Well, it's been a whirlwind since we were with you there in Toronto on the floor, rang the bell. It was really a highlight. And since then, we've had the privilege to build the business further. We made our first earnings release, which hopefully shareholders would have picked up on. We're profitable, growing on the revenue side, and really want to emphasize that for a company at our stage with the growth outlook I think we have, to have achieved that profitability right out of the gate is very exciting for us and a mission accomplished, but it also means we're moving ahead. So what do? Zefiro Methane is an environmental services business that is focused on the reduction of methane emissions from heritage oil and gas wells throughout North America and globally. Now, that's what we are. And I think a lot of people, when they hear that's what we do, they actually scratch their heads because they didn't know there were a lot of heritage oil and gas wells in North America. And that is part of our education process, that yes, indeed, there are literally millions of older oil and gas wellbores that no longer have a solvent parent that can afford to really extract them from the ground and get the ground back to where it's usable again. And that's what we do, is we go in and remove those wellheads. And more importantly than that, we go downhole to where the producing reservoir was, and we seal that cap rock back again. And when we do those two things, we protect the leaking of methane into the atmosphere at really remarkable rates, which hence our name, Zefiro Methane. And we also protect the water table from further potential contamination. And of course, we decontaminate any potential problems with the land. So that's what we like to say, is with every job we do, we're helping out both the sky, the land, and the water. And we're excited to be building a business that's profitable and is doing well by doing good things.
That's great. And I imagine you don't just fall into a role in an industry like this. So maybe a little bit about yourself, Talal. Can you tell us a little bit about the background and your experience and how you became the founder and the CEO of Zefiro?
Thanks for asking. Sure. No, this one doesn't fall right into this. And can you hear me okay? Because I think you froze there for a second. Can you hear me all right?
Yes.
Great. So yeah, my background is, I have a long career on Wall Street in energy and in environmental markets. I worked with JP Morgan through all of my career, a firm that I have the utmost respect for. And one of the things I got to do with JP Morgan was play a key role in setting up our first voluntary carbon offset trading desk. That was back in 2008. And basically, one of my jobs there was to sift through what was then a very new product, carbon offsets. Still, it's a new product to a lot of people, but back then in 2008, it was very new. And I had to convince the risk departments and all the stakeholders within a very conservative firm that we could safely trade that stuff. And so developed some very strict views on what makes for an investment grade carbon offset that a client of a top tier bank, like where I used to be, could be comfortable was money good in terms of being able to show value against an emissions target and reducing that emissions footprint. And so we built a lot of those lessons into how we do things at Zefiro. And we've actually also got the band back together a little bit. I've, brought Tina Ryan, who was a remarkable carbon trader, leader, and person, and she's our chief commercial officer. And we have a few other folks from the JP Morgan stables as well. And we're trying to create really an investment grade carbon credit product. And You asked me, I've gone off script a little bit. How did I get into it? We saw a problem, which is this huge methane leak issue running to the millions of wells. It's an unfunded liability to the tune of hundreds of billions in the US, and it's actually hurting a lot of communities if it doesn't get dealt with. And so we thought, well, can we go back and dust off our experiences from carbon 1.0 and encourage the carbon markets to help us fund this and do a lot of good. And so far, we're really excited about the progress.
That's great. And you're the first public listed issuer as far as methane abatement that I'm aware of. Maybe you can let the audience know what sets Zefiro apart from the competition, or what the competition might even look like out there.
You were cutting out a little bit, but I think you were saying that at least on my end, I couldn't hear it. But we're the first methane abatement focused business out there, and I think that's true. We actually chose the name a while before the methane issue was really popularized, made more relevant by various factors in the market over the last year. And so we even considered taking it out of our name at one point because we thought we were tired of answering questions about what is methane. But we focused on methane abatement because the simple impact of it has 25 to 84 times the greenhouse gas potency of CO2. And it is in the context of like North American communities, there's a tremendous amount of methane that gets leaked out of industrial processes and doesn't need to be there. It's not naturally occurring. And so you've got this, very big global concern around greenhouse gases. And so methane certainly fits the bill for that. But even in terms of cleaning it up helps. But even more than that, methane, if it is toxic to humans, it's not something you want to be breathing in if you don't have, if you can help it. And it is, it scars the landscape. I mean, if you have a methane leak on a site, you can't build anything there. You can't use it for farming. You can't even, it's not great even as a park. So we thought, this is really got multiple directions of environmental impact that anyone, walking in off the street can appreciate when we take a site that was previously contaminated and we go off the site and we've cleaned up the sky, the land, and the water, and now you can use it for anything. It's hard to find someone who doesn't like that. And we saw it as a huge opportunity.
Right. I just received a question from our audience. I think it's a good time to insert now. But the question is, can you speak to any of the leverage in your business model, Talal? Obviously, the effort in front of you seems very time and capital intensive.
Sure. And no, thanks for the question. And of course, the word leverage can mean a lot of different things. But in terms of, we don't use a whole lot of debt. Our numbers are out, and I think you can look at those. But we're very moderate in the way that we apply, financial leverage. What we're trying to do is develop operating leverage. And by that, I mean be the low cost manufacturer of carbon offsets. And so when you are able to deliver profitably at levels in this offset market where others can't, it just gives you tremendous ability to, be profitable through the cycle and frankly, be a well risk managed business, which is what we need to be if we're institutional quality.
And do those carbon offsets, Talal, do they generate carbon credits?
Yeah. When I use the word offset, it sort of is a synonym for carbon credits, but it is that world can be bewildering. There are so many different contracts and things that go by the name of carbon credit. We couldn't get into it all here, but yes, by carbon offset, I mean voluntary carbon market credit. We work through the registries that are recognized by our buyers. We're guided by our buyers. So, there are a number of institutional grade registries around. We work through the American Carbon Registry, which has been the first to issue a methodology, which is, to the uninitiated, the carbon methodology is a lot like a prospectus for a new type of offering, describes how you do it, what's involved, and they've gone to the effort to do that. And we're delivering under that rubric. And so that carbon credit is a voluntary offering. At the same token, a lot of what we do is applicable into other markets and will be monetizable across other credit types, both within North America and internationally.
Super. Now, you've only been public for a couple months, but I've noted even recently there's been a few key developments and key updates already. And I'm wondering if we can maybe break down and dive into two or three of those as well. Starting with a month ago, and you've referenced it already, you released your first corporate earnings and quarterly earnings as a public company. For those that maybe haven't gone through that release, can you paraphrase those results for our audience?
Absolutely. Thanks for giving me the chance. Yep, we did issue our earnings, and I did send out a letter that I wrote to investors summarizing some of what we've done. But the key headlines to me are in the quarter ending March 31st, we're able to report top line, our best ever quarterly revenue, and also approximately 10% up from the prior quarter. And, quarter on quarter, 10%, not bad for a company that's trying to grow. And our revenue is, cash that we get from doing our services right now. So it's very transparent revenue. We're profitable. And that was the other piece that I really wanted to highlight from that earnings release is, the numbers are in the release, but a lot of companies at this stage, after just going public and really just getting off the ground, being able to be profitable right now, it gives us a ton of flexibility. It means that we can raise capital as we need. We can expand when we need to expand into accretive opportunities. And that's, a position we wanted to be in. It's hard to get in that position, and the credit really goes to the whole team for putting us there.
Sure. Now, the second development I noticed was your own ownership stake, a CEO and a founder that walks the walk and talks the talk. You increased your own ownership stake to almost 30%. Can you comment on that a little bit as far as your vested interest in the future and the vision of the company?
Absolutely, I'd be delighted to. So, yes, I'm all in on this business. I've rarely seen an opportunity in my career to chase very large markets with an innovative business model that puts you in the position to really be the category winner. And that's what we believe will be. We've got multi-billion-dollar markets for cleanup in just the United States and in Canada. And the carbon credit opportunity is similarly large. And we're pinching ourselves about the opportunity. And as for our involvement, myself and my sponsor group, we've participated in every round and will continue to expect to do so. It's something that I think we hope investors will come along for the ride with us and agree with us, but we're big believers.
Yeah, I can certainly appreciate that. And what else I respect is the third development I noticed most recently was your inaugural letter from the CEO to all stakeholders. And I know investors always want to hear from the CEO directly, and it's something I hope will can continue. But maybe some comments or some highlights from that letter that we maybe haven't covered already.
Sure. Well, look, I mean, we got a chance to, in that letter, talk about some of our philosophy, some of our approach, and why we think this is good. I've covered some of that in my comments on this call, but we've also highlighted the fact of where we've come over the last 12 months. And, it's hard to, we're always with our investors so focused on what's coming up in the future. But if you look back over the last 12 months, we completed two highly significant, transformational for us acquisitions. We've been able to mobilize and get into the very early stage of a whole new sleeve of the carbon market. We've announced last year, in that 12-month period, our pre-sale of carbon offsets to a world-class broker-dealer, Mercuria Energy. And we've just been able to I wouldn't say everything that we said we would do, but we've managed to do all the key things we said we'd do. And that does not happen with just, some money and even a good business plan. It happens with execution and people committed to pull all these things together. And so, I mean, what I feel like we have now is the ability to go out and do it again and hit a bunch more, even more exciting benchmarks that we'll be telling you about in the days and weeks to come. And so those are I suppose people hear a good idea, they hear about a good addressable market. I'm obviously selling the potential for our company, but in the back of their mind, our investors thinking, can these guys actually do it? And I just want to remind you that we've got the team that's brought us here, and just watch. We'll be extending that team even further.
Execution is certainly key, and maybe understanding for our listeners, just what you see as far as the overall addressable market. Where you're focused today, where you see it maybe going in the future, and which would lend to a few more questions that came in from the audience, and all along the same lines is. Why is the stock a buy today? Well, why should investors
Sure.
invest today?
So fantastic. So the addressable market, I mean, it's quite dizzying. You can think of our the opportunities are really exciting. Um, we have three different main revenue streams for the services we offer. And just to review, the services we offer on every occasion are come into a contaminated or potentially contaminated site. It's an inactive oil and gas well, and we deal with it properly. That requires specialized training, licenses, equipment, and is in itself a hazardous activity. When we leave, you have land that's usable for any purpose. You don't have any methane leaks, and the water table and the soil are protected for use. That service that we provide can be purchased by the corporate world, so that's oil and gas producers that want to pay for best execution. They want to pay for a specialist that can come out and ensure that they'll never have an issue with that well site again. And there's plenty of that business that goes around. There's about 20 to 25,000 wells a year that gets plugged by the market. These are E&P companies all across North America pay for that business. And it's a pretty fragmented market. We think we can be the leader in just that vertical as we continue to scale. We already are one of the biggest single fleets, and we're the only fleet for the corporate market that only does plugging and abandonment. We don't use our equipment to open up new wells. We don't use our equipment to perforate a new zone and bring more production online. We don't do open hole work, as it's called. We just do retirement. In that sense, we're a monoline service provider, environmental services only. So corporate is an interesting opportunity, and that is a multi-billion-dollar annual opportunity already, and we're chasing it and growing. To that corporate line of business, we're adding the carbon market, the carbon finance business. That business is for us a wider profit margin. We're an innovator in that. We think we'll be a first mover to monetize carbon credits. Carbon credits of this type have been issued by other companies. We're not the first to issue carbon credits, but it's a relatively new market for methane abatement within the last year. And we think we'll be the first to meaningfully commercialize this and bring in real cash flows that can drive us to acquiring more rigs, hiring more people, and plugging more wells. We think we can more than double the productivity of our current footprint by just the carbon markets alone. So there's your sort of, if you had a one layer cake before with the corporate work, we're adding a second layer, which is the carbon markets. Now, there's a third layer, which is, in the middle of all this, and after we built our business plan, the federal government and the states started really waking up to the issue and started releasing material money to the states in the U.S. To deal with some of these heritage problems. And that number is now in excess of $5 billion US. That's been earmarked for that. If you include just recently, within the last 24 hours, finalized another $850 million from the Department of Energy for methane abatement for old oil fields. There was a $4.7 billion award, which came a year and a half ago. Now, our track record has been pretty good in being able to bid for and win that business. And we're able to, we think we can reliably obtain 20 to 30% of available funding in that space based on our past track record as those dollars and as those monies get rolled out. So that's our third layer, growth layer on the layer cake. And now, picture, if you will, we're in Appalachia, so that's 4 states. We're going to be, by the end of 3 years, if we're able to roll forward on our execution as we like, present in 5 additional basins and touching on all 26 states that have this problem in the US. And someone's going to ask about Canada. Of course, we want to move into Canada as well. We have better data on the US and our operations are in the US, but we see the issues there as well. And so if you add all that together, it's, current footprint, expand it with 2 new uncorrelated revenue lines, and then go blow that out across a much larger service territory in the US, Canada. And then, from there, there's methane issues across Europe. We've been learning up on a roadshow right now in Europe and talking to you from London. This is a global problem. And it's one of those few global problems that has a lot of buy-in from everybody. And so so we do think we do have a ton of growth opportunity, and I hopefully answered your question.
You did. A land of opportunity indeed. And I can't believe 25 minutes have gone by already, but you did mention Canada, which will lead me maybe into my last question before we conclude the session today. But as a new public company, why the Canadian capital markets first, and why did you choose to list on Cboe Canada?
Well, we chose to list on Cboe Canada because we actually spoke to a number of folks, and I have to say, your modern platform, the data and support you're able to provide, and look, it's a global market, and that shows through in the way you provide. And we want to be a global business. So our operations in the US, why did we IPO in Canada? Really, it's because the Canadian venture markets, early stage venture in public form, it's a tradition and a market that doesn't exist in the same way that I know of in the States. And I also think that, Canadian investors are thinking a lot more about sustainability and the need to build profitable businesses that can drive a sustainable solution. And, we went where the investor support was, and that was the Canadian venture markets. And we're going to continue to build bridges to, all investors that want to get behind what we're doing where we can. And we've cross-listed now to Frankfurt. And the fact that, you guys allow that capability so quickly to move and touch different pools of investors, talk to them through what we did in coming public on the Cboe. It's been a really good decision, and we're excited about all the support we're getting from you guys.
Thanks for that, Talal. And Cboe Can is definitely proud to be home of innovative companies like Zefiro. And I certainly look forward to supporting, and we as an exchange, your public company success going forward. We have come up on the 30-minute mark. And so I think we'll conclude today's session on that note. But I certainly appreciate your time, especially joining us from London. And good luck with the rest of the non-deal roadshow out there. And we'll make sure you get any other audience questions that have come in over the session that we weren't able to get to today. But on that note, thanks again, Talal.
Thank you, Scott.
And this is Cboe Canada signing off from our Investor Spotlight session today. Thanks for joining.